the full 180 days, but just
And right now
2
it will be
days
report
post their second quarter earnings.
last
So their
month,
lockup is
12%.
expiring here. It's looming. In 2 days it will be out. I
Let's
saw
see.
a lot of
BTC.
concern about that, and then questions about if there would be another
Subscribe,
issuance of
give like,
other
don't
locked
forget.
up shares. Kevin, what are your thoughts on that, knowing that in 48 hours, about 83% of their Class A shares, could potentially float in the market?
Yeah, so from a mechanical standpoint, should that actually put some pressure on the shares? Yes, right. As you see individuals actually selling into the market, that means that the quantity of the supply of shares in the market is going to be plentiful, and that could also push prices down. But if you look at over the long term, the impact of these lockup agreements really having a meaningful and sizable impact for a company over the 2-year, 3-year span, that's just not the case. So yes, mechanically, yes, it could be a headwind here, but I wouldn't be too concerned about it over the long term. I think where you get a little bit more concerned is if from a shareholder standpoint, if you see them kind of issuing more shares to the market as the stock price and the valuation is really stretched to the upside here, do they still try to raise capital? And no matter how much cash a company has on their books, if they have an opportunity to raise more cash, very cheaply, then they're going to do so. I think that would be a little bit more of a bigger risk than the ending of this lockup period. Over the long term.
Let's see NVIDIA.
And Jeff, this lockup period has been very interesting because it's mentioned in every note, but D.A. Davidson made note in their note that they issued before earnings that they think the language is so ambiguous that there is a small percent chance that they think that on the call they may say they're locked up the normal period of time and they won't release till September 24. Do you think that has any potential to affect the narrative here if they say it's not actually looming, it will be the standard 180 days?
It certainly could. To Kevin's point, I mean, technically or theoretically, this could have a big impact on the shares. And I know, to your point, I've seen a lot of analysts point to this lockup period, a lot of discussion around it. So it's possible we would see an impact. If we
let's see financials.
180, I mean, it is, I think, around 83% of their Class A shares that'll free up. So it's certainly significant. So we could see some reaction to it. At the same time, I don't think it should have a big impact on the stock, especially considering all the other factors that investors are paying such close attention to.
And with this only being, Kevin, go ahead.
Yeah, and I just want to kind of highlight this too. It depends on how these shareholders, especially those that are within the company, actually liquidate these shares.
Did you invest in Palantir? Put in comments.
Period, it doesn't just mean
subscribe,
like
give like
just pressing the sell button on their computer and it's just freely hitting the market. Those that actually have a significant amount of shares should generally go through a third party in order to liquidate those shares at a volume weighted average price. So we have to be mindful of that as well. It's not going to just be open the floodgates and market orders just hitting the tape the day after. There's going to be some structure to some of these cells too.
All right, and they've just come out. I'm just pulling them up here. Their revenue came in at, as it's loading for me, at $1.212 billion. So that is going to come in ahead of expectations. Expectations were calling for that to be at $1.08 billion. As far as their operating income, I'm scrolling down here through their net loss margin. They have a net loss of 209. Let's see, they've converted to EPS here as we scroll down through here. Operating income margin is down to 2% though, which was 20% in 2024. So that will be a number I think people are very focused on here. The revenue again coming in ahead. Now their loss for the second quarter is 60 cents. The estimated loss was not expected to be 60 cents. The numbers I'm looking at calling, they were expecting 46. We were expecting 23 on that. EBITDA margin coming in right in line at 62%. Estimated was for 61.9%, but they did post a pretty substantial revenue beat of about $200 million here. What are, and as we look at the 2Q net loss here, 267 million overall, estimated loss was 241.3. So a greater loss than expected there. Jeff, I'll come to you first as we get these numbers, a revenue beat, but an EPS miss here.
Yeah, I mean, the market is reacting slightly to it, a little bit up, coming kind of back down to where they closed at. But I think the revenue beat is obviously fantastic. Again, I think the market had high hopes going in this, higher than just what the expectations of the street was. So coming in above 175%, which was expected in terms of year-over-year growth, I think is fantastic. The loss, certainly, the earnings per share loss being higher, Not what you want to see, but I think if you can justify it based on the expansion and everything else we're seeing, then investors will probably look the other way for that one.
And Kevin, I want to come to you here too. For operating income, this number just coming through at 19.2 million. The estimate was for 43.8 million. So, some interesting mixed numbers coming in. What are your thoughts, guys? We see now we're going down about 2.5% as more numbers come out.
Yeah, it's going to be volatile. Look, we're not even going to get their estimates or their quarterly guidance until the conference call, so we got to hold our breath as these numbers kind of hit the tape here. When you're looking at the quarter, I would say it's a little bit mixed, but it's not too bad. Actually, if you look at it on a year-over-year basis, their comps are actually better than what we saw this time last year. And so that's obviously going to be a bright sign. They were the first ones to actually have the availability of Blackwell within their suite or their enterprise suite. That's also going to be a tailwind for them here in the near future. They did talk about bringing a new hyperscaler customer that they signed for the quarter. They don't name who it is, but that's also interesting. Maybe we hear something around that relationship on the conference call here. And they talk about a couple of other achievements for the quarter. They also raised some capital by issuing some notes or some debt. Yes, obviously, is that a little bit of concern? Maybe, but it's a growth company, but there was a very strong demand for that debt as well. So you have to kind of weigh the pros and the cons here, issuing new equity, looking for new capital from investors, or issuing debt. Whatever's cheaper is probably going to be the best route for them at the moment. So it seems like a good quarter. I'm looking for the conference call, looking at the guidance moving forward. We just don't have that guide. And I think the guide probably will rapidly readjust the price action that we will see either to the upside or downside over the next hour or so.
Yeah, and certainly it will. Kevin, you just brought up it is a growth story here. Their EBITDA for the quarter coming in at 753.2 million, which was better than expectations for 675.7. But certainly from the increase from last year was at 249.8. So if growth story is the argument, they are growing at a rapid rate. Jeff, the question is it rapid enough?
Yeah, and I think Kevin's made some excellent points on this, which is we're seeing this debt come in. It is something to be concerned about. I think investors need to keep their eye on it. At the same time, it points to the fact that the company needs to meet this high demand. They need to be able to expand at this level, right? They're operating those 33 data centers in the U.S. and Europe right now. We know that there's been talks about partnerships. You probably read some about the Core Scientific potential takeover. There's been opposition to that, but that sort of thing could really help springboard this company and maybe even cut down on some costs. So investors are going to pay close attention to that. And again, growth story, there's some concern, but I think we're seeing an okay reaction right now.
Well, Jeff Pierce, Kevin Green, thank you for helping us break down CoreWeave. I do want to bring in George Tillis into the conversation as we take a look at Kava's earnings. Kava shares tanking right now, down about 18%. They cut their outlook on a weak second quarter as consumers face what they are calling fog and uncertainty, George. Walk us through some of these numbers.
But why? Which one is the best?
Yeah,
Nvidia, Palantir?
On the surface, I'm just going to look, first off at the trend of Kava, going back to December of last year, Kava, Sweetgreen, Chipotle, for that matter, are down. So that speaks perhaps to what's going on in the industry space. And I think these numbers also follow suit with what's going on with the underlying trend in the space. But it looks like at the very least on an adjusted 9%. EPS front, they posted 16 cents. That did beat the 13 cent estimate that they were
what stocks did you buy? How many percent did you make? Put in live chat. Okay, subscribe, give like to this video.
Even last quarter, the company posted 20.
And recommended to buy Palantir. Do you remember? Did you buy Palantir using sell put option? Take a look. If you invest in Palantir, how much you could make? Did you make 148%? It's better than even Bitcoin. Take a look, 148%. For last 6 months, almost 60%. It's the best. And recommend to buy Nvidia as well. See Nvidia. Nvidia is very good as well. 32% and 67%. What about Walmart? Let's see Walmart. Walmart 15%, and for 1 year it's good, 50%, almost 51%. What do you think? Is it good? So subscribe, give like to this video, and don't forget we go live many times a day. Okay, that's why invest, be smart, don't play with crypto or any other stocks. Invest in good companies. Like here, you see, they make a lot of money despite tariffs, despite anything. Okay, subscribe, give like to this video, and don't forget put in live chat what stocks did you buy, and how much did you make. Yes, I'm from Europe. Put in comments what stocks did you buy, when, and don't forget in this channel we have full description how to sell options. How to sell options. You don't need a lot of money. For example, we sell options against SoFi. Take a look, SoFi stocks. Take a look, SoFi, 67%. So you can easily make 67% year to date. Or 200, 264. Much more better than Bitcoin. Stable, reliable company. Located headquartered in the US. Okay, I see some people said Meta. Yes, Meta is good as well. Let's discuss Meta. What stock should we discuss? Put in comments. We will analyze Meta. Let's go. Meta is going up and shows very good profit, very good return. Meta, good, 31%. Year to date. For last year, 53%. Did you make money? Put in comments. It's very good, profitable company. Why? Because first of all, AI helps them. Then they make a lot of money on advertisement. Even if you don't use Facebook, WhatsApp, or any other stuff, they still make money. Okay, so don't forget, subscribe, give a like. We go live stream every day and we tell you what to buy, what stocks, and we discussed your portfolio as well. Better to buy a reliable stock than cryptocurrency, because you can lose all money. Here's a reliable company. Oh, let's consider Nvidia. Let's see Nvidia. Nvidia, perfect, 30%. And for last year, 67. Did you invest in Nvidia? I see some people said yes. Nvidia, yes, it's very good. Or Palantir. Put in comments what did you do, what did you buy. And we have free courses how is better to buy, what brokerage is better to use. That's why don't waste money on different stuff, just invest in stable companies like we discussed right now. And I told you what analyzer can you use. Okay, so пока go, subscribe, give like, see you next video. Bye bye.